Welcome back to the world of accounts. Today, we are starting a wonderful topic, meaning and objectives of accounting. So, are you ready to continue learning with examples of Mr. Rajkumar?
Yes, sir. We are ready to learn more about accounting.
Great! Let's dive right into the next section, objectives of accounting. Why do we do accounting? What's the purpose behind it? Let's explore these questions. These are the main objectives of accounting, which we will discuss in today's video. Recording of transactions. The purpose of accounting is to systematically record business transactions. Every financial action, whether money coming in or going out, needs to be recorded accurately. This helps business owners understand their financial position.
So it's similar to how Mr. Rajkumar, the shopkeeper, keeps track of his sales and expenses.
Exactly, Bushra. Let's take Mr. Rajkumar as an example. He runs a small shop and needs to keep track of everything: sales, purchases, cash flow. This is where accounting plays a crucial role. The main objectives of accounting are: the first objective of accounting is systematic record keeping. This involves maintaining accurate and organized records. For example, Mr. Rajkumar records each sale and purchase in a systematic manner.
Sir, Mr. Rajkumar is recording all transactions in the memorandum of journal.
Yes, Nishant. After that, he maintains different registers for each type of transactions.
Sir, so recording in a systematic manner means Mr. Rajkumar is creating separate registers for different transactions. For example, he maintains a cash register for cash transactions, a creditor register for payable transactions, a debtor register for receivable transactions, and an expense register for the expenses of his shop.
Yes, Bushra, you are right. Here we have seen the data is recorded in a systematic manner as it can be used when required. Now, let's move on to the second objective of accounting, which is calculating profit or loss. Every business needs to know whether it's making a profit or a loss. By comparing sales to expenses, Mr. Rajkumar can determine if his business is successful or not.
So, he calculates whether he's in profit or loss by comparing his earnings and expenses. Like we have seen in summarizing where we prepare profit and loss account.
Yes, Nishant. Mr. Rajkumar compares his sales and expenses for the month and creates a summary to see whether he's making a profit or his business is at a loss. This summary helps him calculate his profit or loss accurately.
Okay, sir. We understand now. First, Mr. Rajkumar records his transactions in an organized way, and then he checks his profit and loss by summarizing the information. This helps him know how his business is doing.
Yes, Ansh, right. Now, the next objective is understanding the reasons for profit or loss. If Mr. Rajkumar faces a loss, he can look at his accounting records to figure out why. Maybe he's spending too much on purchasing goods, offering too many discounts, or having high shop expenses.
So accounting helps him figure out what's going wrong or right in his business, like we have seen in analyzing of accounts.
Sir, can you give me a bigger discount?
I can only give a small discount right now. My business made a loss this month because I gave too many discounts to other customers. I need to be careful with my spending.
Oh, I understand now. Thank you for explaining.
Yes, Bushra. Mr. Rajkumar is now understanding the reasons for his profit or loss. He found out that by offering too many discounts, he's facing a loss. Now that he knows this, he can handle the situation better moving forward. This was all done by analyzing his accounting records. Another key objective is determining financial position. Accounting helps a business understand how much it's worth. For example, Mr. Rajkumar wants to know his net worth, how much his assets are worth, and how much he owes to others.
So, students, assets are things like cash, goods, and the shop itself. And liabilities are things like the money he owes to suppliers. What we have seen in balance sheet when we have summarized our accounting records. Let's have a look to balance sheet. In the balance sheet, we can see that there are two sides, one for assets and the other for liabilities. By circling the main assets and main liabilities, we can determine our financial position. This helps us understand how much the business owns, assets, and how much it owes, liabilities, giving a clear picture of the business's financial health.
Thanks, Vaishnavi. Well explained. Now, students, this is why accounting is so important in creating a balance sheet. It clearly outlines the business's assets and liabilities, helping us determine the financial position of the business. This allows us to understand whether the business is in a strong financial state or needs improvement.
But, sir, what about checking the progress of the business?
Great point, Nishan. Tracking progress is another important objective of accounting. By reviewing financial statements, Mr. Rajkumar can monitor his business's progress over time. For example, he can compare this year's profits to last year's. Is his business growing or shrinking?
Dad, why do you look so sad?
Son, I've been tracking the progress of my business, and we didn't make a profit this year.
How did you analyze the progress?
Beta, I compared this year's profit with last year's, and unfortunately, we made less profit than before.
Oh no, Dad. What are you going to do now?
Beta, I will make better decisions for the future so that next time we will make a profit.
So, accounting helps in making better decisions for the future?
Exactly, Bushra. It provides valuable information for decision making. Whether you're running a small shop like Mr. Rajkumar or a large company, accounting helps you understand the financial health of the business, which then guides future decisions.
What will be the better decision for your business now?
Beta, I found out that I've been offering huge discounts. I'll focus on correcting that mistake and start giving smaller discounts from now on.
Okay, Bushra, please come on stage and review all the objectives of accounting that we have learned.
We have learned 5 main objectives of accounting. First, systematic record keeping. In this, we record all transactions in a systematic manner, creating different registers, like the cash register, bank register, expense register, and credit and debit registers. Second, calculating profit or loss. Then we summarize the transactions and prepare the profit and loss account to determine whether the business has made a profit or a loss. Third, understanding the reasons for profit or loss. After summarizing, we analyze the reasons behind the profit or loss to understand why the business is performing in a particular way. Fourth, determining financial position. We prepare the balance sheet to assess what the business is worth, including its assets, liabilities, and owner's equity. Last, tracking business progress. Finally, we compare the current year's profit with last year's to see if the business is growing or shrinking.
Yes, Bushra, excellent summary. Now, let's explore the functions of accounting, which are closely related to the objectives we discussed earlier. Now, we will learn the 7 functions of accounting. 1. Systematic recording of financial transactions. Second, classifying financial data like ledger creation. 3. Summarizing, analyzing, and interpreting financial data. 4th, reporting, communicating financial information. 5. Ensuring compliance, auditing, and verification. 6. Facilitating, budgeting, and planning. 7. Monitoring and controlling resources. Okay, students, you already know the first 4 functions of accounting, right? We've learned about systematic recording of transactions, classifying them, summarizing, analyzing, and reporting financial data. Now, let's move on to the 5th function of accounting, which is ensuring government compliance, auditing, and verification. Let's break this function into 3 parts. Ensuring compliance. This means making sure the company follows all the rules, laws, and regulations set by the government. This includes things like paying the correct taxes and following accounting standards. Auditing. This is when someone, an auditor, checks the company's financial records to make sure everything is correct. It helps confirm that the numbers are accurate and reliable. Verification. This is the process of double-checking the company's financial information to make sure it's true and trustworthy. Hold on with me. I know you may have questions about accounting standards, regulations, and auditing. Don't worry. We will cover all of this in future lectures. Stay with me and everything will make sense as we move forward. Let's move on to the sixth function of accounting: facilitating budgeting and planning. What does this mean? Accounting helps businesses plan for the future by creating budgets and forecasts. This means preparing budgets. Accounting looks at past expenses, how much money was spent before, and helps plan how much money will be spent in the future. Forecasting revenue. It also helps figure out how much money the business will make in the future by looking at trends and predicting what will happen based on past sales and data. In simple terms, accounting helps answer important questions like: how much do we expect to spend? How will we make money? By using past information to predict what will happen in the future.
Oh, sir, it means accounting helps with budgeting by analyzing past expenses and predicting future revenue?
Yes, Nishan, you got it right. Now let's move to seventh function of accounting: monitoring and controlling resources. Accounting helps track the company's assets, things the company owns, liabilities, what the company owes, and expenses, money spent. This ensures that the company is using its resources wisely and prevents fraud or mismanagement.
So, accounting also helps in protecting assets by ensuring all business transactions are documented and accounted for.
Right, Bushra? Accounting helps protect assets by making sure everything is recorded properly. Also, it helps business owners make informed decisions. By looking at the accounting records, Mr. Rajkumar can identify which parts of his business are performing well and which areas need improvement.
So, accounting is really crucial for business decision making.
Yes, Ansh, it helps in ensuring resources are used efficiently.
So, we have learned 7 functions of accounting. First, recording transactions. In this function, we record all money activities. Second, classifying data. Here, we create registers for related transactions to keep things organized. Third, summarizing and analyzing. In this step, we make summaries of the transactions and analyze them to understand what is happening. Fourth, reporting. After summarizing, we create reports to share the financial information. Fifth, ensuring compliance and auditing. In this function, we check that all money activities follow the rules and laws set by the government. Sixth, budgeting and planning. We create budgets for the upcoming period and plan how we can improve from the previous period. Seventh, monitoring and controlling resources. In this step, we ensure that assets and liabilities are under control and no fraud or mistakes happen.
Good job, Bushra. Now, let's move on to the difference between bookkeeping and accounting.
Wait, isn't bookkeeping a simpler version of accounting?
Exactly, Nishant. Bookkeeping is the process of recording daily transactions, like Mr. Rajkumar writing down his sales and purchases in a simple notebook. Accounting, on the other hand, is a more complex process. It involves classifying, summarizing, and analyzing those records to create detailed financial statements like the profit and loss account and balance sheet.
So, sir, bookkeeping is like recording in the memorandum of journal and creating related registers. Accounting, on the other hand, takes data from bookkeeping and creates summaries like the profit and loss statement, trial balance, and balance sheet.
Yes, Beta, you are right.
So, bookkeeping is the first step, and accounting is the advanced analysis part.
Yes, Bushra. Bookkeeping records the data, and accounting involves analyzing and summarizing it to provide meaningful financial information. Bookkeeping is simpler, but accounting requires more advanced skills.
Got it, sir. So, bookkeeping is about recording and accounting is about analysis.
Yes, beta. You are right, Nishant. Now, when we talk about the combined knowledge of both bookkeeping and accounting, we call it accountancy. Accountancy involves understanding the principles and techniques of both bookkeeping and accounting. This knowledge helps you maintain proper records and prepare accurate financial reports.
So, to sum it up, bookkeeping is about recording, accounting is about analyzing, and accountancy is the knowledge of both.
Okay, students, see this carefully. We are going to discuss the basic difference between bookkeeping and accounting. 1. Scope. Bookkeeping. Bookkeeping is concerned with identifying financial transactions, measuring them in money terms, recording them in the books of accounts, and classifying them. Accounting. Accounting is concerned with summarizing the recorded transactions, interpreting them, and communicating the result.
Dad, what are you doing?
I'm writing down today's sales and expenses beta. It's part of bookkeeping.
Bookkeeping? What's that?
Bookkeeping is when I record all the financial transactions of the shop. For example, today I sold 1,500 rupees worth of groceries and spent 500 rupees on restocking biscuits. I'm writing these numbers down in my records.
Second stage. Bookkeeping. It is the primary stage. Accounting. It is a secondary stage. It begins where bookkeeping ends.
So, bookkeeping is just writing things down?
Bookkeeping is the first step where I write down everything we earn and spend, like sales and expenses. Accounting comes next. It's not just about writing things down. It helps me check if the shop is making money or if we need to make changes.
Third objective, bookkeeping. The objective of bookkeeping is to maintain systematic records of financial transactions. Accounting. The objective of accounting is to ascertain net results of operations and financial position and to communicate information to the interested parties.
What's the purpose of bookkeeping then?
The purpose is to maintain a systematic record of every transaction. For example, tomorrow, if I forget how much we sold today, I can check my records.
And accounting?
Accounting tells me the overall financial health of the shop. For example, last month, I used accounting to figure out that my profits had increased because of our new snack corner.
Fourth nature of job, bookkeeping. This job is routine in nature. Accounting. This job is analytical and dynamic in nature.
Bookkeeping sounds simple. Is it easy?
Yes, it's routine work. Every day, I write down sales, expenses, and payments. It's repetitive but important.
And accounting?
Accounting is more dynamic. When I calculate profit, prepare a tax statement, or decide if I should add a new product, that's accounting.
5. Performance, bookkeeping. Junior staff perform this function. Accounting. Senior staff perform this function.
So, bookkeeping is like writing and accounting is like thinking.
In small shops like ours, I do both. But in big companies, junior staff handle bookkeeping because it's simple.
And accounting?
Accounting requires expertise, so senior staff or professional accountants do it.
6th, relation, bookkeeping. Bookkeeping is the basis for accounting. Accounting. Accounting begins where bookkeeping ends.
Dad, does bookkeeping always come before accounting?
Of course, without these daily records, I wouldn't have the data to calculate profits or file taxes.
So, it's like building blocks?
Exactly. Bookkeeping is the base, and accounting builds on it.
7. Special skills, bookkeeping. Bookkeeping is mechanical in nature and thus does not require special skills. Accounting. Accounting requires special skills and the ability to analyze and interpret.
Do you need special skills for bookkeeping?
No beta. Bookkeeping is mechanical. Anyone who can read, write, and do basic math can do it.
What about accounting?
Accounting requires more knowledge. For example, I need to understand GST and prepare a balance sheet. That's why I had to take help from Mr. Sharma when I started this shop.
I see. So bookkeeping is simple, but accounting is for experts?
It was easy, sir. We got it.
Okay, good. Then, Nishant, let's review what we learned today.
First, we have learned the 5 objectives of accounting. 1. Maintaining systematic records. 2. Calculating profits and losses. 3. Understanding the reasons behind profit or loss for. Determining the financial position. 5. Tracking the progress of the business.
Then we have learned the 7 functions of accounting. First, systematic recording of financial transactions. Second, classifying financial data like ledger creation. Third, summarizing, analyzing, and interpreting financial data. Fourth, reporting, communicating financial information. Fifth, ensuring compliance, auditing, and verification. Sixth, facilitating budgeting and planning. Seventh, monitoring and controlling resources.
So, to sum it up, bookkeeping is about recording, accounting is about analyzing, and accountancy is the knowledge of both.
Exactly, students. Great job summarizing everything. Tomorrow, we'll continue with the next section of the chapter. Don't forget to share these insights with your friends and let's continue learning together. Keep practicing and mastering the world of accounts.
Thanks, sir. This session was really helpful.
See you tomorrow, sir. See you tomorrow, sir.
Goodbye, everyone. Take care and let's keep learning together. See you next time. Thank you for watching. Don't forget to like, share, and subscribe for more updates. For more information or to purchase the full course, feel free to reach out to us.